Today we are considering the reasons why your setups fail. The reasons why your trading setups fail, be it demand and supply, or smart money concepts, or whatever kind of trading that you are in, that you take, setups that you take, why it actually fails. And this is part 2 of it. Actually, last week I told you we started this series, and it was on part 1, and I gave us about 3 reasons last week why your setups fail, and today we're continuing it. The first reason I said last week, try to view that video, is in the description box of this video. The first video on this series. The first reason we said that you are trading against the higher time frame, order flow, or market structure. And the second reason why your setups fail is that you're entering trades without proper entry confirmations. And the third reason is that you use retail tools like indicators and trend lines in your trade. So this week, now I'm going to be showing you the part B of this setup of this series, and the fourth reason why your setups fail. The fourth reason why your setup fail is that you are not paying attention to liquidity pools. Okay, you are not paying attention to liquidity pool. Okay, you are not paying attention to liquidity pools. Very, very important. Liquidity pools. Okay, so that is the second. That's the fourth reason why your setups fail. Liquidity pools. You are not paying attention to liquidity pools. And there's a saying in the smart money concept world, and the saying is that if you don't look out for the liquidity, if you don't watch out for the liquidity, you will become the liquidity. Okay, that is a saying. It's a popular saying among smart money traders that if you do not watch out, don't look out, you don't pay attention with regards to liquidity, you don't watch out for where the liquidity is in the market, you would most likely become the liquidity. And liquidity is actually retail stop losses. That is liquidity. Liquidity is money for smart money concept, for institutional traders, for hedge funds, big banks. Liquidity is they're actually trying to run out liquidity, sweep stop losses. That is actually liquidity. All right, so, and you all need to know that liquidity always rests above, most times liquidity rests above demand zones, and liquidity rests above supply zones. And I made a separate video on the concept of liquidity. There are different types of liquidity. There is trend line liquidity. There is a double tops. There are double tops and bottoms, double tops and double bottoms liquidity. There are triple tops and bottoms liquidity. There are equal highs, equal lows liquidity. There are also trend line liquidity, also range liquidity. There are different types of liquidity. I've made a detailed video on the concept of liquidity in trading. Okay, it's very, very important you understand this concept. I'll be putting that video, I'll be linking that video in the description box of this particular video. So how does not paying attention to liquidity affect you as a trader? How does it affect you as a trader? The mistake most traders make is that they actually trade liquidity. Most traders trade liquidity. They trade liquidity, or they take trades. They take trades from a liquidity. Okay, you don't take trades from a liquidity, even if the liquidity is some supply or demand zones that you trade from. Sometimes they are liquidity. You don't take trades from liquidity. You avoid taking trades from liquidity. Avoid taking trades from liquidity. What do I mean? Let me actually show you an example. You might have like a demand zone like this. A demand zone like this. Okay, so some traders would, this looks like this is a drop base rally demand zone, and this is a rally base rally demand zone. This is a drop base rally demand zone. This is a rally base rally demand zone. Okay, so some traders would want to take this as a zone. All right, they would want to take this as a zone and let the market come down to here, and now for them to buy this market. But this is most times a liquidity. This is most times a liquidity, and what the market does is that the market will just come here, sweep this liquidity and target this zone. The market will rather buy, most times from my experience, buy from this zone. So this is not the right zone. This is the right zone to trade from. Let me show you what I actually mean. You see, so this, what happens is that instead of the market to come here to buy from here, the market would actually sweep this liquidity and come right down and mitigate this zone. This is a higher probability zone to take the trade from instead of this. So this is a liquidity. So a mistake you would make is like trying to take trade from here. This is not the right zone because this is a liquidity, or this is a liquidity pool. So don't take trades from liquidity pools. Avoid taking trades from liquidity pools. This is the demand scenario. For the supply scenario, you have something like this. You have something like this. You have a zone like this and like this. So you avoid taking trades from here. You avoid taking trades from here. Most times this would not work. So what you do is that the market will come and take here as a liquidity and mitigate this particular zone and sell from here. All right, so this is what will actually happen. The market would take here as a liquidity, go right up, mitigate this zone that is not a liquidity, that is not a liquidity pool. It will mitigate this zone and sell from here. So avoid taking trades from liquidity pools. Avoid taking trades from liquidity pools. Most times they don't work. All right, most times they don't work. I'm going to be showing you short examples of all what I mean. I'm going to be showing you short example of what I actually mean in a while. Just stay with me on this, okay? Another thing you need to understand is that you need to pay attention to liquidity. That most times the market sweeps liquidity. The market sweeps liquidity above your supply zone before actually selling. All right, the market sweeps liquidity above your supply zone before selling, and the market sweep liquidity below your demand zone before buying. Should I come again? Let me reiterate what I said. The market would most times take out liquidity above your supply zone before buying. Okay, the market, I'll show you in a while what I mean. The market will sweep liquidity above your supply zone. The market will actually sweep liquidity above it and before selling. Okay, and the market would sweep liquidity below your demand zone before buying. Okay, this is what I actually mean. If you have a, and this plays out by virtue of what we call the turtle soup strategy, in the sense that you have a demand zone in this fashion. If you have a demand zone in this fashion, and this is a zone like this, okay, if you have a zone like this and you are trying to trade this zone, this mitigation of this zone, most times what the market will do, you would want to take a trade from this demand zone, but not known to you that this is a liquidity pool. So the market would not just come here, mitigate this zone and buy. The market would want to sweep this liquidity pool because retail stop losses will be placed right here. So what happens is that the market would come, break the zone, take out this liquidity, all right, sweep all the stop losses right here, and still buy. All right, the market, and still, I'm going to be showing you all these descriptions in the chart in a while. I just want to explain it first before I show you on the chart. So the market will sweep all this liquidity. All this liquidity will be swept before the market will now eventually buy. So that is why sometimes I don't place hard stop losses. This is the reason why sometimes when I have a setup like this, I would not place, I would use a mental stop loss sometimes. All right, depends on the situation, because the market would sweep this liquidity, and if you have your stop loss here, it will be hit, and still the market will still buy. It has happened. If you may have observed this, give me say it in the comment section. Okay, if this has happened to you, that whether you place a trade and a buy trade and the market comes to your zone, take out the stop loss you placed below your demand zone, and still later buy. If this has happened to you before, can you tell me in the comment section? Just say yes, this happened to me. My liquidity have been swept before, my stop loss have been taken out before, and the market still went ahead to play out in the direction of my intended trade direction. So for a sell scenario, we have something like this. We have some liquidity pool right here, and the market still gives you, there is a zone. Sorry, you have the market, there's a liquidity pool right here. So this is a zone which several traders would want to take trades from, but the market in most times, instead of coming to mitigate this zone to sell, it will rather take out this liquidity first. So if there's a liquidity above your supply zone, you need to know that the market will take it out first. So the market will sweep this liquidity. These are stop losses, retail stop losses taken out just right above the supply zone, and the market will still sell. So this is a sell scenario of liquidity pool sweep. All right, so I said liquidity always rests, most times liquidity most times rest above your supply zone, and several times as well liquidity rests below your demand zone. So you need to pay attention to this. So when you don't pay attention to liquidity pools, you become the liquidity, and your setups most times will not work. All right, what else also do you need to know about liquidity? Like for a trend line liquidity, you have a trend line liquidity like this. That could be, you have a trend line, this is a trend line, and the market is always hitting this trend line, respecting this. This is the first touch of the trend line, this is the second touch of the trend line, in fact this is the third touch of the trend line. And another trader, the retail traders would want to come to take trade again here to sell. Okay, they want to take this trade. All right, because of you have first touch, second touch, third touch. But most times what the market do, the market would, this trend line is a liquidity. This is a liquidity. All right, this is a liquidity trend line. Please try to view my video on trend line, on liquidity pool. I've made a separate video on liquidity, and I'm going to be linking that video in the description box of this video. So liquidity is very, very important. If you don't understand liquidity, you will always be in liquidity. If you don't understand liquidity, your liquidity will always, your stop losses will be raided. So here, what the market will do most times is that the market would take out this, because there will be stop losses here, retail stop losses will be here. So the market will do what? Take out, sometimes or most times take out all the stop losses and mitigate a zone. All stop losses have been swept. The market will now mitigate the zone before it actually does the buy. All right, so if you want to take trades using a trend line, be careful. You could actually you risk having, maybe you want to take this trade from here. All right, you want to take this trade from here like this. Most times the market will just rather go up, take out all the stop losses on the trend line, and before it actually sell. So I'm going to be showing you on a chart soon. So this is for the sell scenario. For a buy scenario, you have a situation like this. You have a situation like this, whereby you have a trend line being respected. First touch of the trend line, all right, second touch of the trend line, and in fact third touch of the trend line. And sometimes the trader will now want to trade this. This is a trend line, this is a trend line, this is a liquidity pool. So you want to trade this mitigation, but most times the market would not, this will not work. Why it will not work is because that trend line has served as, that trend line becomes a liquidity pool. So what happens is that the market would rather come take out all the stop losses and mitigate another zone. So you have a buy like that. So this is very, very important. It's very, very key that you pay attention to liquidity pools. Pay attention to liquidity pools. So that is the fourth. That is the fourth reason why your setups fail. Now the fifth reason why your setups fail is because you are trading. The fifth reason is that you are trading inducements. You are trading inducements instead of main zones. All right, I've also made a separate video on the concept of inducements. Inducements are luring the institutions and hedge funds and large financial institutions, luring retail traders to take trades, and with an aim to sweep their stop losses again. All right, but this one is like is a luring. Is a luring. Actually, inducement is a manipulation of retail traders by institutions in order for them to be retail traders to take trades with the intention of overrunning or sweeping or invalidating their trades. All right, invalidating their trades. So that is similar to mitigation. It's similar to liquidity runs, but this one is actually an inducement. It's an inducement. They are trying to lure you into taking trades from a zone that you think that zone is going to hold, but that zone will not hold. I will show you right now. I'm going to show you right now. That is, so please try and view that video on inducement, a detailed video I made earlier on the inducement. So see how it works. This is how it works. You have a zone. You have an order flow like this, and now another zone created right here. Like this. So now this is a zone 1, 2. Which one should you trade? Let me ask you now. Which one should you trade? Should you trade zone 1 or zone 2? These are mitigated. These are mitigations. These are mitigations. Now this is the setup. Now should you trade this zone here, zone 1 or zone 2? Zone 1 or zone 2? Okay, this should you trade zone 1 or zone 2? Most times zone 1 is an inducement. Zone 1 is an inducement. They want you to take trades from here, from zone 1 here. But what would happen most times from experience is that the market will overrun your stop loss and now mitigate zone 2. This would fail. This would work. So zone 1 is now an inducement. Zone 1 is not the main zone. All right, the zone 1 was created with the intention of luring you to take trades from zone 1 so that your stop loss will be raided. All right, so that is an inducement. All right, I'm going to be showing you in the chart in a while. That is an inducement. So be careful about inducements. Inducement zone, don't take trades. Avoid taking trades from inducement zones. Inducement zones most times fail. They are traps. They are traps. The institutions, hedge funds, and large financial institutions want you to take trades from inducement zones. They actually created those zones. Those are false zones. They actually created those zones with an aim to trap you, with an aim to lure you into taking trades from them, and then they sweep your stop loss. Now this is a sell scenario. Let us see a buy scenario. You have a bullish market structure, like that. Okay, now you have this is the main zone being created. After the main zone was created, you have another mini zone created like this. Now what is the zone? This is zone 1 and this is zone 2. Zone 1 and zone 2. Now, some retail traders will take trades, will aim to take trades from this zone, but most times this zone is an inducement zone. The market will come, sweep this zone, and mitigate zone 2. All right, mitigate zone 2. This zone will be swept. This zone will be. So zone 1, it was created to lure you to take trades from them, though they are false zones. So inducement zones are fake zones. They are fake zones. All right, they are intended to lure you, to lure retail traders to take trades from them with an intention to overrun their stop losses or sweep their stop losses. So you need to be careful. That's another reason why your trades fail, or why your setups fail, that you are taking trades from inducement zones instead of the main zones. These concepts I'm sharing with you are concepts that will actually help you to increase your win rate. This concept will help you to maximize your profit. This concept will help you to avoid losses. Your losses will drastically reduce if you assimilate all these concepts I'm sharing with you. Now let us see some chart examples. Now this is an inducement. You can see the trader tried to take trades from, this is a double case in the sense that some traders would want to take trades from here. This is an inducement zone. This is also another inducement zone, and as well this is also a trend line. This is as well a trend line liquidity. Touch 1, touch 2, touch 3. All right, so now the market also went right up, take out this inducement zone and bought from here. Okay, you can see this is a sell scenario of the inducement, and also even as well trend line liquidity. All right, so there's an example. So let us see another one. This is also an inducement, and also a trend line. Is a trend line liquidity. The trend line has been holding. The trend line has been holding. Trend line has been holding, and it now came to this point. For instead of the trend line to hold here, to the trend line to hold right there, the market took out all stop losses right there and mitigated this zone before it actually now sold. All right, so that is an inducement and a trend line liquidity right there. Okay, so let us see more examples. I'll mark them so we can just can be faster for us. So you can see here as well, this is a trend line that has been holding, and this formed a liquidity pool. All right, so the market took out all the stop losses right here and went right up to mitigate this zone above the liquidity before it actually sold. So this is a trend line liquidity. So there's a liquidity pool, stop losses, liquidity pool right here, where this liquidity pool we are raided. It was raided, and before the market now sold. Right, let us see more example. All right, you can see here as well. So some traders, this is a case of taking trades. This is a case of trying to take trades from a liquidity pool. So the trader in this case would want to take this trade. This is also like an inducement as well. This is an inducement as well. Inducement to take a trade from here. So the market overran all these stop losses, which are the liquidity pool, and sold, mitigate this zone, and now sold from here. All right, so this is don't take trades from liquidity pools. Do not convert your liquidity pool into a demand zone or a supply zone. Most times they fail. All right, most times they fail. Here as well, this is a buy scenario. You see, this is a trend line that has been holding. The trend line has been holding, but in this case the market swept all the stop losses of the liquidity. This was a liquidity pool. The market swept and now mitigated this zone right here, because retail traders would have been trading this trend line, thinking that the trend line will continue to hold, and now the institutions broke this trend line and still made the market to buy after all the retail stop losses have been raided. That's the concept. Now let us see another one. You can see this case also. This is also a beautiful case. The market converted this into a liquidity pool. Stop losses of this is a touch 1, touch 2, touch 3. All right, but in this case, the market broke this trade line and mitigated this zone and bought. All right, so you need to train your eyes to know this concept. You need to train your eyes to identify liquidity pools. Very, very important. Okay, this is also a case. This is a case on a bearish inducement. This is a case of a bearish inducement. All right, the market created this zone. This is a false zone created to lure you retail traders to take trades from, but the market has an intention of sweeping the stop loss right there. When sweep the stop losses placed above this zone and now still sold. So this is an inducement, bearish inducement. All right, the inducement for you to take a sell trade with an intention to sweep your stop loss and now still take the trades in the intended direction. This is another one. This is a clear case of bearish inducement. Several retail traders will take this trade from here, not knowing that this is an inducement zone. Their stop losses placed above the zone. You are raided, and the market now mitigated this zone and sold. Okay, it's an inducement zone, bearish inducement zone. All right. So this is a bullish inducement zone. Okay, this is an inducement for you to take a buy trade from here. But the stop losses you are raided, and the market mitigated the zone just right below the main zone. This is zone 1, as I showed you earlier in the example. Zone 2. This is zone 1 and zone 2. So the market take out zone 2. Zone 1 don't work, and this is zone 2, which is the main zone. So the market mitigated zone 2, which is the main zone, and the market bought. Right, so that is bearish. That is a bullish inducement. Let's see if we have more example here as well. Bullish inducement. All right, this is an inducement zone. The market took out stop losses placed below the inducement zone and mitigated the proper zone. This is zone 2, zone 1, as I showed you earlier. Right, let us see if we have more. So that is the example. So I've shown you the concept of the two concepts I shared with you right now in this video. Is your setups do not work, or they fail because you are not paying attention to inducement. You are not paying attention to liquidity pools. You are trying to trade the liquidity instead of trading the proper zone, or you're not paying attention to liquidity resting above your supply zone, or the liquidity resting below your demand zone, or even the trend line liquidity, or the range liquidity, the double tops, double bottoms, triple tops, triple bottoms, equal high, equal lows liquidity. All right, and the second reason why I said your setups fail is that you are trading inducement zones instead of the main zones. You are trading inducement zones instead of the main zones. It is very dangerous, and it often leads to losses. It often leads to failed trades, and I don't want you to have failed trades. That is the reason I'm making these videos for you. So this is the second series. This is the second video in the series. Next week we're going to be wrapping this series up and move to another concept. So next week, do not fail to view the part 3 of this video. This is part 2. If you did not view part 1, try to view part 1 of this video where I started this series. This is part 2. Next week I'm going to be showing the next video. I'm going to be showing you I'm going to be explaining some more reasons why your demand and supply zones and the smart money concept trades do not work, why they fail, why your setups fail. So that is on the next video I'll be making next week. All right, so till I come your way next time, do not forget to continue to practice. Also, you want me to mentor you personally? If you want me to mentor you personally on trading, please contact me. My contact detail is in our free Telegram channel. If you're here to join our free Telegram channel, the link to that channel is in the description box of this video. In our free Telegram channel, I share free setups for you that you can trade at your own discretion. All right, free setups. You want me to mentor you? I'll take you by the hand. I have several mentees I'm training and mentoring, and they're becoming good at trading. So I take you by the hand and mentor you until you become a profitable and a professional forex trader. All right, I do that at your own pace. I do one-on-one training, not collective training. And the reason I've said all the time that I do one-on-one training is because each individual has their individual learning curve, and I stoop to your level. I'm patient with you until you learn and become good at trading. All right, so try to contact me if you want me to mentor and train you. Please, if you're yet to subscribe to this YouTube channel, kindly subscribe to this channel, like our videos and share our videos so that more traders will benefit from these concepts. All right, and become profitable in trading. If you enjoy this video, if you are learning from this video, kindly give this video a thumbs up, and do not forget to subscribe if you're yet to subscribe, and share it with your friends. Till I come your way next time, do have a wonderful and a blissful day ahead. Bye.